Hi, I'm Joe Morgan, a flat fee financial planner from Best Financial Life, and I'm sharing some money moves that might be good for you to explore. Now, this is not financial advice. Financial advice is specific to you and your situation, and I don't know you. So instead, what I want to do is share something that might be appropriate for you. And today, we're talking about company stock. Do you have too much? Now, company stock is not an investment, it's a gamble. And why do I say that? Well, an investment is something that we're confident could never go to zero and something we expect to grow over time somewhere north of inflation, that will help fund our future expenses. Any single company stock, whether it's a company you work for or a company you're familiar with, doesn't really matter. By itself is not truly an investment because it doesn't satisfy those criteria. Now, you should already have a long-term investment strategy in place, and your company stock, as you sell it, the money should filter into that long-term investment strategy. And a rule of thumb that some people use, and I hate rules of thumb, but it's a good place to start, is to have no more than 10% of your investable cash in your company stock, or really in your gambling portfolio. So if you have a small little portfolio set aside where you're buying and selling individual stocks, that's also your gambling portfolio. So your company stock is part of that, and those together should not be more than 10% of your investable cash. And I'm guessing if you're getting stock awards, and if you think about all the unvested stock you have, which is still exposure, right? Because it's going up or down with the market, um, you're automatically over that 10% limit. Now, why such a low limit? Well, you have too much tied to your employer already. Think about it. Your income comes from your employer, right? Very undiversified. Your salary, bonus, your future growth and income, your career trajectory, to a great extent, depends on your employer. Um, you just have way too much tied there. There's no way for you to know what your company stock is going to do in the future. So even though you may know a lot about your company, you may feel really proud to work there and very, very happy, there's just no way for you to know. There's too much going on because there's so much more going on at your company than you are really even in tune to. So there's no way for you to know what your company stock is going to do. And another thing that's kind of related to that is it's really easy to have too much confidence in your own employer. You're so close to what's going on, and you're not looking at the competitive landscape, and you're not seeing what's necessarily changing in the marketplace competitively. So you're too close to the situation. It's that whole can't see the forest for the trees situation. So make sure you have a low amount of money in your company stock, including the invested portion, and that you're filtering those funds into your long-term portfolio. Now, if you would like to have a direct conversation with me about this or any other financial topic, I'm offering a free half-hour conversation on any financial topic you want to talk about. And I say free because first, there is no charge. That's what free means, right? Second, I promise that there will be no sales pitch. I just want to do this to help people who are struggling with their finances. So reach out to me at joe@bestfinlife.com to set that up. Thanks so much. Enjoy the rest of your day.